Target, the retailer once nicknamed Target for its trendy image and loyal shoppers, is at a turning point. This Wednesday, the company will report second quarter earnings for fiscal 2025. But the stakes couldn't be higher. Sales have been stagnant for nearly 4 years, store traffic is down, partnerships are unraveling, and the stock has lost more than half its value since 2021. So as investors and analysts prepare for the numbers, the question is clear. Can Target still compete with Walmart, Amazon, and Costco, or has it lost its edge? Here's what Wall Street expects for Q2, according to LSEG. Earnings per share, $2.03. Revenue, $24.93 billion. But compared to prior years, they reveal a sobering trend. Annual sales flat since 2021, stock down 60% from its peak, another 22% decline in 2025 alone. Target's problems are layered. First, customer experience. For years, Target differentiated itself with clean, stylish stores, curated merchandise, and friendly service. But interviews with shoppers and ex-employees reveal that many of those qualities have faded. The stores feel more generic. The Target magic isn't as strong. Second, store traffic. Data shows foot traffic has been down almost every week since late January. Third, tariffs. Roughly half of Target's merchandise is imported. Higher tariffs have driven up costs, forcing tough decisions. Leadership is another big question mark. CEO Brian Cornell, who took over in 2014, led Target through the pandemic and years of competitive disruption. But after extending his tenure past retirement age, Cornell is widely expected to step down soon. Investors want clarity. Who will succeed Cornell? Looking forward, Target has lowered its full-year guidance. Sales expected to decline by low single digits. Still, Target leaders insist they're confident in the long-term strategy. One bright spot is advertising and retail media networks. This isn't just about one company. Target's earnings will be a litmus test for American consumer health. The results will ripple across the entire retail sector. Are households pulling back on non-essentials? Are tariffs reshaping retail pricing power? And how are shoppers dividing dollars between physical stores and online giants? Target was once seen as the stylish alternative to Walmart, a brand that balanced affordability with aspiration. But now, with sales stagnating, partnerships ending, leadership in transition, and stock in free fall, the company faces its toughest crossroads in decades. This week's earnings report may reveal whether the Target era can be revived, or whether America's favorite red bullseye has lost its aim.